Hello, good evening.
Good evening, Austin. How are you today?
Doing pretty good. How are you? How are you?
Recovering. So my voice is a little bit scratchy.
Oh, okay. I think it's this up and down, inconsistent weather. That's what it is.
Yes, and the sinuses problems and things like that. So I hope that I don't have to strain too much to speak. But as of 2 or 3 days ago, there was no sounds. At least you can
Oh,
hear me
wow.
now.
Are you serious?
Yes.
Okay, okay. All right. Well, I'm always a firm believer of starting in a timely manner. Um, we are streaming live on Facebook, and this is a combination because you'll go through your presentation. And then afterwards, I'd like to get into, we'll get into a Q&A from folks who will join. And what they'll do, they'll put their questions in the Q&A. And of course, like last night, they'll also, have comments on Facebook. And then, I'll go into my own, Q&A with you just to get, to know a little bit more about you beyond the bio, right? And then we'll go from there. Okay.
Awesome.
Yes, but I thank you so much for doing this. Really appreciate it. I've been following you for a while, and just listening to the messages that you convey, on your Facebook Live videos and interviews, and I thought, well, I'll add this piece, to the webinar series. It was supposed to have been 4 speakers,
Okay.
going from Monday, Tuesday, and tomorrow. Monday, Tuesday, Wednesday, and Thursday. And I wasn't going to schedule anything on Cinco de Mayo because that's a holiday. So,
Right. Right.
you know,
Well,
you know. Uh-huh.
yeah. But I'm happy to be here. I always, it's my passion talking about this.
Hmm.
For too long we haven't had this conversation. We've
Right,
even we've even had lots of taboos around having this conversation, and
right,
I think that in part has held us back for so long. So we have to get this conversation out. And instead of this, what we were getting is uh, misinformation.
right,
And as such, our community, we don't readily accept these because we've been fed misinformation for so long. So now we have to unlearn and relearn.
yes,
Um, and so it's always my pleasure to talk about this because, as you know, it's not being taught in schools.
right,
Uh,
right.
and so
Exactly. And we'll have a wide audience, watching and getting this information. We'll also touch a little bit on, demographics and how this impacts certain demographic communities, especially, the wealth gap, and how is it important for certain groups to take investing and retirement planning and life insurance and all these things seriously. I personally, for me, I always try to figure out, okay, what else I need to do,
yes,
myself as an entrepreneur, but we're going to go ahead and get started. And then we'll go from there into it's just introduction of our speaker, and then we'll go into the presentation. All right.
sounds
Um, and so basically, welcome. This is the second presentation discussion in a 3-day National Small Business Week webinar series. We are virtual by way of COVID-19 since the pandemic, or I should say before the pandemic. We were live and in person at several conference centers around the Metro Atlanta area, where we had keynote speakers, breakout sessions, workshop facilitations on various topics. We had an expo with vendors and so on and so forth, a full conference. But due to the pandemic, you know, everything was taken onto the virtual platform, and we really haven't gone back into face-to-face and in-person events. At least, you know, I have not. I've gone to other events, attended other events that, you know, that have gone back to an in-person model, you know. But, you know, we definitely believe in continuing the mission and continuing the agenda of advocacy in making sure that small business owners and entrepreneurs get access to the information they need in order to grow successfully and grow sustainably, and also to take care of themselves as entrepreneurs, you know. So from time to time, we'll have different speakers facilitating discussions on various topics. Tonight, we are focusing on something very important to our entrepreneurs and small business owners, and I'll be admitting people as I speak. Retirement and investment planning for small business owners. This is very, very important, because for small business owners, I always say, and it is, you know, commonly said within the ecosystem, that your business is not your retirement plan. Your business should not be your retirement plan, right? And I know there are many individuals out there who, you know, they work their businesses, and it's a mom and pop model, it's a micro model, and they're working their small businesses for 10, 15, 20, 30, maybe 40 years, right? And there may be, or there may not be, a succession plan in place or an exit plan in place, right? And then they're using that business as a means to retire from it, right? And that's their sole retirement plan, right? So
Yes.
we have Ms. Carmen Bernard, who is an authority in the investment, retirement, financial planning space. And she's going to have a very good constructive discussion tonight with us as small business owners and entrepreneurs, whether you're running a business already or whether you're in the pre-startup phase. But it's good if you're in the pre-startup phase. This is something for you to already start thinking about before you launch a business, okay? Thompson Management Consulting, we have actually planned and coordinated and executed the Entrepreneurship and Small Business Summit for the past 9 years. Next year would be our 10th year, our 10-year anniversary. And as I've said, thank you. And as I said, prior to COVID, we were meeting face-to-face with an in-person model. We've gone from Georgia Perimeter College Conference Center to the Busby International Center at Gwinnett Technical College. And we've gone to utilize facilities at DeVry University and also at Discovery High School. So we've had those resources and those facilities in which we've hosted the conference. But since COVID, we've remained virtual until maybe next year or so. We'll you know, transition into a hybrid model where it'll be virtual and in person.
Yes.
But with our consulting firm, we work with small businesses and entrepreneurs in business planning and coaching, mentoring, marketing, operations, financial analysis. You know, not accounting, but financial analysis is two totally different. Say, I'm not an accountant. I have accountants that yell at me. You should be doing this. Okay, all right. Just like I beat people up, right? In my consulting business, right? We consultants, we beat each other.
Right.
You know, but I enjoy what I do. I enjoy being an advocate for small businesses because small businesses drive the U.S. economy. You know, we're 31 plus small businesses in the U.S. 31 million plus small businesses. Get my numbers right. 31 million plus small businesses in the U.S. We drive about 66% of all net jobs created. So we're not only a significant economic driver in the U.S. and in our own local communities, but we also create jobs. And by creating jobs, we're creating salaries from which employees go out and spend their discretionary income or the disposable income. And as business begins to grow and expands, then it creates opportunities for hiring more people, right? When you hire more people, that's more money in the economy, right?
Yes.
This is why National Small Business Week was created. It was created to put an emphasis on small businesses. It was created to celebrate and recognize the achievements of our small businesses in the United States of America. So I am grateful to be part of the solution. I'm great to be, a contributor, an advocate, a consultant in this space. And I'm just glad to continue doing the work, for our small businesses, local and in the metro Atlanta area and locally here in Lawrenceville. I am also an elected official. So part of my platform is advocating for small businesses in the local Lawrenceville area as an elected city councilman. This video, this series is not for the purpose of selling my services to anyone, but it's for the purpose of delivering information, critical information. Last night we had a webinar discussing emotional intelligence and how emotional intelligence is important for growing a business successfully. Tonight, we'll speak about retirement and investment planning. And tomorrow night, we'll discuss the pitfalls, the legal pitfalls that we want entrepreneurs to avoid by doing the due diligence and taking, running their business seriously from a legal aspect. But tonight we have Ms. Carmen Bernard, and we thank her for being with us this evening. I also want to recognize those who are joining us tonight on Zoom and those who are joining us on Facebook. We thank you all for tuning in and just for your continued support to the Entrepreneurship and Small Business Summit and what we have done for the past 9 to 10 years. I just want to, just some instructions really quick. If you have comments, please leave them in the chat, or you can raise your hand. For those of you on Facebook, raise your hand, I'll acknowledge you. If you have questions, you can put them in the chat, either or. For those of you on Facebook, please make sure that if you have comments or questions, you can leave them on Facebook, and I will read them to Ms. Bernard. And again, we're streaming live on Facebook and we're recording. And so this video will be available for those of you who wish to go back and review it. If there's anything critical that you have missed, it's an advantage to have that video so you can go back and look at it again. Because I know I always do. I always go back and look at the videos for informational purposes. So tonight we have Ms. Carmen Bernard, and I'll go ahead and introduce her by reading her bio. And then we'll make way for Ms. Bernard's presentation. All right. Carmen Bernard is a wealth strategist, financial literacy educator, and independent insurance broker. She helps families protect their income, eliminate debt, reduce taxes and interest, create an income stream that will never outlive, and establish a framework to build a legacy of generational wealth. Carmen believes a solid foundation in the education of how money works is the key to decreasing the wealth gap of our community. As a result, she holds financial seminars for organizations, churches, schools, workplaces, and individual families. As president and CEO of Big Facts, Bernard Insurance Group's financial and consulting services, she and her team work tirelessly to correct the injustice committed on our people by ensuring that our community is provided the necessary tools to help narrow this wealth gap. Unfortunately, these lessons are not taught in schools, churches, or anywhere. As a lifelong teacher, Carmen worked as a professional trainer in corporate America for 15 years and as a business education instructor in the public school sector for another 15 years. She holds a master's in education from Walden University and a bachelor's in business management from Rutgers University, as well as numerous certifications in human resources and life and health insurance. She hails from the South American country of Guyana. She resides in Stone Mountain, Georgia, with her husband of 34 years. 34 years, congratulations. Still trying to make one. 34 years. She has 3 children and 7 grandchildren. In her spare time, she gives back to her community by tutoring and volunteering on several worthy causes. Ladies and gentlemen, please give a virtual applause for our authority in this space, Carmen K. Bernard.
Oh, wow. Thank you so much. Thank you so much, Mr. Austin Thompson. Listen, it is my honor, my pleasure to be here today. And I want to say thank you for inviting me to speak with your audience. I have taken the liberty of sharing it on my page as well. So hopefully it can get out there, because I believe that this conversation is one that needs to take place and reach out, as far as it can to in our community. I want to apologize first for my throat. So I'm a little froggy because I'm now recovering from a sinus infection or something with this weather and the pollen and everything like that. So I do hope that it's not too harsh on your ears. I need to update my bio this year. In August, it's going to be 36 years that I've been married. So I apologize for that. So I do need to update that. But listen, I'm super excited to be here. Listening to the conversation yesterday on emotional intelligence and how that drives the growth of small businesses got me super excited about speaking today, because the growth of small businesses means we're talking about dollars and dollars in our community. And small businesses is what drives the economy, right? We have lots of large businesses and things like that, but if you do the research, you'll find that small businesses is what drives this economy. So we have to make sure that our small businesses, and especially small businesses in the Black community, are able to get this information. Once again, we're not giving any advice here today. We are just simply giving educational information. And if you need additional information, you will want to reach out to your financial professional, or you can reach out to me. I'm sure Mr. Austin Thompson would allow me to leave my contact information. But tonight, I am not trying to sell you anything. I'm merely here to educate, because this is what I do and it's my passion. All right. So I'm going to go ahead and share my screen, and let's hope we get that done right here. Are you able to see it? Do you see?
Yes, ma'am.
Is it one big screen or a couple of things going on?
It's one main screen.
Okay, great. Awesome. So I think we're good.
And you have I think you have the side notes, or no notes, but the next slide, but we can see it.
Okay. All righty. I was hoping that what you saw was just the big screen, because I can see it on one side. I didn't want to have the notes showing, but oh well, doesn't matter. I mean, not the notes, but the next slide. That's fine anyway. Yeah. I'm going to get past this, because this is just basically what you talked about in my bio. I like to call myself an agent of change for families, with making sure that we help families to protect income, to eliminate debt, and to create legacy. And you'll see why this is an important conversation for small business owners. So today, we're talking about financial planning, retirement planning and investment planning for small businesses. And it's not just about what most of us think about when we think about retirement planning and investment planning. We think about, oh, we need to save some money for the future. it's a lot more than that. And that's one of the reasons why I am happy to be here to talk a little bit about some of the other things that we need that goes into financial retirement planning and investment planning. And the very first investment that I think that we need to, as small business owners, we need to be aware of is knowledge. That's the first investment. We have to invest in knowledge, in understanding what are the things that we need to do to help to protect our small businesses, to grow our small businesses, so that that small business can keep us in retirement, so that that small business can provide a future legacy, right? So financial literacy is the most important thing, the foundation, the first thing that we need to understand as small business owners. You know, we have knowledge of all sorts of things. We have knowledge of sports, web designs, cooking, cars. But to retire well, we really need to know the rules of money and how money works. We really need to understand how to make money work for us. So that's the very first thing. And we're going to talk a little bit about certain concepts in financial literacy as a small business owner that we need to master. And then the second thing that I want to talk a little bit about is exit strategy or succession planning. And you may say, what? We're just talking about business. We're just getting started about business. What are you talking about by mentioning exit strategy or succession planning? But you heard Austin mention earlier today, he said, many of us do not think about succession planning. We don't think about that exit strategy. And the honest truth of the matter is that we need to think about that when we're planning the business. Before we even start the business, we need to know how we are getting out. We need to understand, we have to have a plan for who will take over our business in retirement or in the event of some unforeseen event, right? What is the plan for getting out? Are we going to be selling this business, right? And most of the times, business owners think about exit strategy or succession planning 3 to 5 years before they get out. We need to do that the same time when we're creating that business plan, the same time when we're looking for who are our competitors, the same time when we're looking for who's our target audience, the same time that we're planning all these other goals for our businesses is when we need to start thinking about it, right? Death. Is that going to be the way that we get out of this? And if that, listen, the one thing I can tell you is that we are going to get out of it one way or another, but we can plan for that. We can plan for if we're getting out in the event of death. We can plan for if we're getting out in the event of disability. We can plan for if we're getting out in the event of divorce. And it may not be your death. It may not be your disability. It may not be your divorce. It may be a partner. So we have to think of those things and start planning for that. What does retirement look like for you? We have to start planning for that when we start that business as small businesses. You know, do we need to have a key man policy in place to be able to help us with this? What's key man policy? We'll talk a little bit about that. And if I don't, remember to ask me, right? In our planning, we also need to look at estate planning. We cannot let a lifetime of work go down the drain. And this is another area where small businesses, we lack to plan for. We're talking about documents, making sure we have a plan for how our assets will be distributed after we pass away, right? We're talking about creating wills, setting up trusts, designating beneficiaries for retirement accounts and insurance policies. And we want to make sure that it's not a one and done process. You know, it is a process where we have to review it at least yearly. Okay, is we don't want to. You don't want to be leaving beneficiaries that you and that person may now be divorced and they're gone, and you've already settled what needed to be settled, but now your new wife or your children are disinherited because you forgot to make a change on this plan. So estate planning, and estate planning is not just wills and trusts. Estate planning, of course, is a series of documents that are set there in place to make decisions so that you can basically speak from the grave. But estate planning, whether you're a business or an individual, should start at like age 18. As soon as you have children that are in college, they're 18, they've gone off to college, they're now officially an adult. And so they need to start that estate plan, and then they can add other documents to it later on, but at least need to have a living will and a power of attorney. Because if something were to happen, you can show up and you can yell and scream that you are the parent. They don't necessarily have to tell you anything or share any information with you. I'm gonna pause there for a second to see if there are any questions or if you wanted to talk about anything that I said so far.
I think we are good to go. I'm checking in the chat, and there's nothing, there are no questions currently in the chat or on Facebook. So you can go ahead. I'm writing down some stuff, but I'll discuss that, toward the end.
Yeah, okay, great. So as you can see, we started talking about retirement planning and about investment planning for small businesses, but we didn't talk anything about money as yet or how. These are still important things that we need to look at when we are looking at our retirement plans and investment planning for a small business. Also, as a small business, we got to think about the potential risks. We got to think about the potential risks that we face as small businesses. Taxes is one big one, right? So you want to, this is the reason for sitting and planning this out, meeting with your financial professionals that will be able to help you based on what your goals are for your business. There are different ways for mitigating taxes, and going it on your own, I'm not even going to say you will miss certain things that you can do that a professional can help to advise you the best way to go. Taxes, they used to say death and taxes are the two sure things, right? And they are. And taxes, for one, the government will collect all the taxes that you give them. That you have the right to pay the correct amount of taxes that you should pay. But if you want to pay more, the government will definitely take it. And then also, on the other hand, without the information and the education and the guidance of a professional, you may make costly mistakes and end up having to pay more. Market, right? The market is a risk, right? Most of our things are invested in the market. And we know, and don't take this as saying that I am against the market, because I am not. It's just one part of the entire puzzle. But with the stock market, you've got to know where you are. You've got to know what are your goals, because depending on where you are, when the stock market takes those dips, you might not be able to recover, especially depending on the where you are in relation to retirement, right? So you may not be able to recover if you are in that what is that called? Austin, you're in football, you know about football, that the red zone, right? If you're in that red zone.
Yes, I was looking for the mic. I was trying to turn the mic on. Yes, you got it.
Yeah, if you're in the red zone of retirement, that 10 years before, 5 years before, you may not be able to recover from a dip that we took in 2008, like we did in 2008, or even in 2020 and 2021. The markets are still down. So yes, the market is a great place for making money and investments. But if you're in your 20s and 30s, you have more time to recover, right? And you also have more, that time is an asset for you, right? Inflation. If you did not think inflation affected anybody, right now, I don't think anyone could not tell you what inflation is, especially since the pandemic, right? You have that same $100 that you were going to use to buy groceries pre-pandemic is now you're getting a third or a half or a third of things that you could purchase with that same $100, right? So that's something that we have to plan for. Yeah. Sometimes when I speak to clients and I say, how much money do you want to retire? And they give that number. They're giving that number based on today. Today, $1 million, in the future, maybe 750,000, maybe 500,000. So you've got to plan for that risk as well. Emergencies happen all the time, right? So we've got to plan for emergencies. Disability, right? A lot of us are so gung ho. Nothing is going to happen to me. I'm good. We're young, especially our millennials and the younger generation. They're not thinking about the fact that they can become ill. And I know several people under 50 that suffered a brain aneurysm and then couldn't work for 2 years, that suffered a stroke, that had one client of mine, husband, was fine, I think he went for an insurance checkup for insurance, and within the next couple of weeks ended up having a battery inserted to monitor his heart, right? And was in his 40s. So these are all things that we have to plan. Lawsuits. Hey, we live in a litigious society. Everybody and their mama is suing you. So you have to plan for lawsuits, right? When you're planning for lawsuits, when you your money that you're saving in a bank is not safe. Your money that you're saving, even in some retirement plans, the individual retirement plans, those are not safe. Those are not protected from that. Now, your 401k might be protected, but even in it's not protected from the IRS. So these are things you have to plan for. Fraud, outliving your money, and definitely death. So these are all potential risks that we have to consider when we are planning, when we're doing our retirement planning, when we're doing our investment planning. Sometimes we are short-sighted. We forget to plan about things like long-term insurance. $1 million can be eaten up so quickly by medical bills. Medical bills is the number one reason why people have to file bankruptcy. Okay. And then knowing our worth. Before legacy planning, before we can even think about legacy planning, we need to understand our worth. And many of us do not understand our worth. Matter of fact, we we might be taken aback by, well, what are you worth? Right? I remember, and for the life of me, I didn't get it when this happened. I was probably in my 30s, and I had to sit on a jury of a woman that passed away while she was right after giving birth or during childbirth. And they ended up having, they ended up suing. And it was a Black woman. And I don't know, Austin, if you know, but Black women, we're not listened to when it comes to lots of medical ailments, especially during childbirth.
Yeah, I've heard of
And
that.
yeah, and so now we have, this is the reason why we have these doulas and stuff like that that are trying to advocate for Black women. But this woman passed away, and it was astounding to me how they were trying to assert what her value was. That to put a dollar on what she's worth. If I asked you, Austin, how much you're worth, you are going to tell me. What are you going to tell me, Austin, if I tell you how much you're worth?
I'm going to tell you, well, you know what? I got to look at my financial plan, but I tell you, like maybe like over 100K, 150K, you know?
I didn't expect that. I
Yeah,
expected you to say priceless, because
yeah.
that's what everybody says. I'm priceless. But guess what? Yes, you are priceless.
Mhm.
But there is a number that is attached to you. And many of us do not understand that number. And many of us do not understand that number because in our community, we've always been devalued. Now it's we're talking about Black Lives Matter, but are they valued? What are we valued at? So even in your business planning, you need to understand what you are worth, right? And believe it or not, your worth typically comes from, if you work for a big fancy corporation and you're making $100,000 a year, that company, you are worth $2.5 million. They're going to look at you that for the next 25 years, you can bring in $100,000 for you're making $100,000, then you are worth $2.5 million to them. How many of us value ourselves like that? Right? We may not think that we are $1 million assets walking around, but we are. If you are making $50,000 a year for the next 10 years, that's 500,000. So for the next 30 years, it's 1.5 million. You are $1 million asset, even though we're valuing ourselves based on the today's dollars. So that's why now is the time to do something about it, especially while we're young and healthy. Life insurance. Oh my goodness. Life insurance. Life insurance before legacy planning. And I repeated that there, but it's bear repeating. We have to value our biggest asset. And the biggest asset is ourselves. It's our ability to earn. It's our ability to run that business, right? So life insurance, we've got to make sure that we are using this tool, and that's what it is. It's a tool correctly. And in the Black community, life insurance for too long is basically either at your job you have a policy. You may not even know what's the policy that you have. Most of the times, it's what if the job gives it to you, it's worth 1 year of your salary. And if you just think about that, if you have a family, if you have people that depend on you, how long is that 1 year of your salary going to last them? Right? So there again, we go back to knowing what you're actually worth and making sure that you protect that asset, you protect that income. You have insurance on your cell phones. in case it drops and breaks. You have insurance on your car in case you get in an accident, but you don't have insurance on you, the person who pays for those things. Right? So life insurance, like I said, is one of those tools that there's lots of misinformation, especially in the Black community, because we were only accustomed to these little debit policies that mom, your grandmother and great grandmother used to pay that 5 cents every week. The guy came around, and most of the times that when she passed away, it could not pay for her funeral. You still had to either use your savings, so it set you back, or if you didn't have any, you had to beg and borrow. You had to do a fish fry. And now the new thing is doing a GoFundMe. And most GoFundMes do not get funded. I look at them sometimes. They don't get funded. So we have to go fund ourselves. Right? You have to go fund you. And you can do that by thinking and planning life insurance as part of that strategy. And the other thing, we think of life insurance as always to do with death. And that is true. That is the original intent. But many other communities are using life insurance in a different way. They're using life insurance to build wealth. They're using life insurance to plan retirement. They're using life insurance to reduce taxes. So we have to become a part of this conversation and understand how we can put this tool together. Life insurance solves the 3 major puzzles, right? Dying too soon. So if you died too soon, too early, life insurance is that thing that is going to protect, keep you being in place of you to protect that family. And it's not the $20,000 and $10,000 insurance that I'm talking about. It's not that final expense that you see the mom and dad, the old mother or the grandmother on television talking about, baby, y'all don't have to worry about me because I've got you covered. Because $10,000 and $20,000 can barely pay for a funeral these days. So we have got to put that out. But life insurance solves the problem of becoming ill, right? And not dying. So you have the ability to use your life insurance while you're alive. I call it life insurance you do not have to die to use. And if your life insurance doesn't have that, you need a review. They're called living benefits. And we'll talk a little bit more about that. The third problem is living too long, if that can be a problem. But living too long, life insurance is also another way of solving that problem of living too long. And it's the type of life insurance. Now, we're going to talk about types in a little bit also as part of our planning. But life insurance, you can create a retirement income stream that you cannot outlive. Even if what you put in is done, they still got to keep paying you. Now, isn't that sweet, right? So, so now we'll talk a little bit more. Those background things I just talked about. It's going to set us up to talk a little bit more about some additional things. When we're busy running our businesses, we don't think about the fact that we need to start saving for retirement. Austin, you mentioned it earlier, right? We don't think about, we're thinking this is the business. We're in the thick of it. We're running the business, but we don't think about what happens when we retire, because we're not going to be living forever. And even if we lived until the day we died, what about the other people that depend on us, right? So retirement savings should be prioritized in a systematic way, right? And you have different ways of doing that. You want to get with your financial professional, but you can use individual retirement accounts or IRAs. You can use 401ks. These are typically referred to as tax advantage accounts, right? I think they are tax advantage now, tax infested later, because you might think that you have socked away, you've socked away $1 million into your retirement plan, into your 401k. And then when it's time to retire, you realize that only 750,000 of that is yours because you're in business with this silent partner that we'll talk about a little bit later. There's also tax-free types of vehicles, such as Roth. They're also tax advantage when you put it in, but then when you're taking it out, it's tax-free. And I have an error on my on the thing there that should say tax-free vehicles on steroids is what I call them, which are more your index universal life insurance policies. That is now a conversation that we are beginning to have, where that it can be a part of our strategy for retirement. Yes, sir.
Are you transitioning through your slides?
I have been.
Okay, we're still seeing slide number 1 of 33, but we're enjoying the conversation.
I'm on slide number 7. Let's see how we can fix that.
All right.
What do you see now?
Okay, I see slide number 7.
Okay, yeah, I'm sorry about that.
That's okay.
I went through a couple of those. Okay, so that's like the third one. So retirement savings, those are different ways that we can save, right? IRAs, 401ks, Roths, index universal life, whole life, high cash value, whole life insurance is another way that you can plan for retirement and building wealth, right? Another thing we don't talk about or think about when, or we need to think about as small business owners, are healthcare costs, both now and in retirement, right? What are our options going to look like, right? Is it Medicare? Medicare is a maze, and I consider myself a Medicare specialist. I speak Medicare, but that's something that many people, it's a whole big maze for people because it's so complicated. Doesn't necessarily have to be, but if it's something with the government, it's going to be. So is it going to be private health insurance? And definitely, are we planning for long-term care, right? Many of us, long-term care is not a part of our plan. $1 million is not enough for long-term care if that's all you have for retirement, because that can be eaten out just like that. With the cost of medical care for cancer and stroke and all these different things, that's gone in a moment. Also, don't think that the state is going to take care of you, because Medicaid is going to come in and they're going to say, you have to spend down your money. They have a clause. It's called a spend down clause. You have to spend all your money down. And so if you have money, before they can start taking care of you, if you have to go into a nursing home or any of those things, you've got to spend down that money. So that's going to be all gone. So if you had any plans of passing some money onto your ears, it's gone. So you have to find ways. How do we plan for that? Right? Okay, so basically, yes, I talked about potential risk already. Financial planning, of course, you want to work with your professional to create a well-rounded retirement and investment plan that takes into account all those areas that I've just talked about, your financial area, your health, your insurance needs. I'm going to move on a little bit to talk a little bit about how money works, because that was the first thing that I said. And as business owners, we have to understand that. Any questions so far, or did you want to jump in a little bit here before I get too far on?
I just, I had a few. I'm just going to ask one for now. Usually when you're applying for life insurance, I don't know if it's in the past or if it's still current. Your health situation played a role in whether you were accepted or denied. Is that still the case?
Yes, that is the case. However, they have so much the underwriting that they do, the medical underwriting that they do. We need not become medical underwriters ourselves and say, oh, I have this, they're not going to give this to me. Just about anyone can be insured. It's the thing is going to be the cost and how much can you be insured for, right? So yes, there's and there are different types. There are insurance that you can get with no medical up to $3 million, right? So, and the best people for doing that would be young people that is pretty healthy, right? That you can and get insured for up to $3 million without even a medical, right? Why? And I'm gonna give you the inside secret of why that's important, right? As a 25-year-old or 30-year-old, and you want to get $3 million worth of insurance, now you got to be insurable. You can't just get $3 million worth of insurance and you making $30,000 a year. But if you're making $300,000 a year, that's not far-fetched that you want $3 million worth of insurance. If your business is bringing in 500,000, and these millennials are doing that, they're bringing in 500,000, $1 million a year, they are able to go out and get insured. And so one of the things that they can do is go ahead and get simplified insurance at first. Why? They most likely is not going to be a medical where you have to go through the medical, go to the doctor and do this and that and whatever. Where the risk is that you can now get found with something, and now you become uninsurable, period. Right? But if you got insurance that was simplified, what they call simplified underwriting, you're just answering some questions, and they do some other background checks, of course, right? They check to see the Medical Information Bureau, what has been reported about you. They check prescriptions and things like that. And if all of that checks out, you may be able to get a large amount, a big policy without going through any medical underwriting, actual medical underwriting with blood and different kinds of tests. And all of that can happen and something is wrong with you, right? But you did not make a misstatement, you did not lie or any of those things, because that's the type. Now, after that, you can now go back and try to do, get additional insurance or try to do one that's medically underwritten. It's going to be less when it's medically underwritten, right? There's a little bit upcharge when it's a simplified policy type of policy. So that's one thing. And when you are young, that's the time to take out those big policies. If you are young and you can qualify for a $3 million term policy, get that $3 million term policy. However, make sure that that term policy is convertible, meaning that if after 30 years, after 10 years or 20 years, somewhere in between that, you can start converting that to permanent insurance without any evidence of insurability. So now you don't have to go through any doctors. You are now insured for that amount. of course, it's going to be more because it's permanent, but the things that you can do with permanent insurance in regards to growing your wealth, in regards to eliminating debt, and in regards to creating a legacy is phenomenal. And so you most likely want to, when I work with younger people, I do a balance. Sometimes we may start with a huge higher amount of term because you're paying so little for it. But we also go ahead and get some permanent ones because of all of the living, I don't want to say living benefits because the term policy that I said have living benefits, but the additional living benefits that you can have with permanent insurance. Being able to use it as a wealth building tool, which I'm going to try to get into a little bit before we're finished. Okay. All right. So I wanted to talk about, can you see my screen right here? Now, can you believe this?
Yes, we can see it.
Awesome. So I wanted to talk about, kind of rewind back to the foundation of all this, right? Financial literacy. 30% of people in the world are financially illiterate. And it just means that they're ignorant of how money works. So it's kind of hard to say it. But in this world, the people who understand how money works prey on those who don't. Right? And so it's absolutely important for us to get this education about how money works. 44% of people, matter of fact, I looked at it at 2019, I think it was 45% of people, of Americans cannot cover a $400 emergency. If something were to happen to your tire or your refrigerator or something, they can't cover a $400 emergency. 45% of student loan borrowers, they're not making any payments. It's now up to, I think, $1.9 trillion that we owe in student loans. Not the average credit card balance in households, a little bit over $9,000. I think over the past 3 years, it went down some. And that's only because I guess, we weren't out as much. So the credit card balance went down a little bit. But 33% of Americans have zero retirement savings. The most people that I run into have between $60,000 and $100,000 worth of retirement savings, pre-tax. So that means they still got to pay taxes on that, right? And most people are living for 30 years in retirement. That's not going to last. You're going to outlive your money, right? So it's important for us to understand some basic concepts. And one of the basic concepts is the rule of 72. Understanding how your money works, how your money doubles, right? The rule of 72, basically you take the interest rate and you divide it by 72, and that's going to tell you how long your money will take to double. Sorry, you take 72 and divide it by your interest rate, and that's going to tell you how long it's going to take your money to double. So for instance, if you're getting a 1% interest rate, it's going to take you 72 years to take your $1,000 to $2,000. We don't have that kind of time, right? We can't put up $1,000 and wait 72 years for that to double. If we got a 12% interest rate, it would take 6 years to double. Banks understand this. And that's why debt runs their society, right? Because it works the same way it works for us, it also works against us. So our credit card balances, you have a 12 and an 18% credit card balance, and you're just making minimum payments, those balances double in 4 to 6 years. So it's very important that we understand that. If you're age 40 and you invested $10,000 and you got a 3% interest rate, By the time you're age 64, you will only have $20,000, right? So what this tells us is the higher the interest rate, the better. But with higher interest rate becomes more risk, right? And so we have to find that balance of where we put our money, right? We can get 18% in a stock market in some years, right? Not in the last couple of years, because everything for me has been down. I don't know, Austin, if you got some secrets to give to me, but everything has been down. Everything, right? We're still behind in the last 3 or 4 years. So we have to find that balance when it comes to growing our money, putting it away and growing it. The other concept that we have to learn is that we have to start as early as possible. In our businesses, you've got to start when you start this business. In our individual lives, we got to start as early as possible. They say that good things come to those who wait, but not in this case. In this case, the longer you wait, the more you have to save. Let me tell you what I run into right now. Many clients, when we're talking about retirement savings, these people want to put up $200 a month. They want to put up $400 a month. Well, here's some numbers for our business owners. If you're 20, right, and you can get a 9% average, 9% interest rate, and you want to have $1 million by the time you're age 67, you can put up $113 at age 20. But by the time age 30, now you have to put up close to 300. And if you're age 50, you got to put up $2,000 a month if you want to retire with $1 million. So this is why we say, this is the second concept, right? Is start early. Start early. Do not wait. Right? Another thing I wanted to talk about, the time value of money. That's the third concept, right? Understanding, starting now, saving regularly, and being patient, right? We don't have any time to waste. Lots of times as new businesses, small businesses, our money is going into the business. Everything is going back into business to grow the business, whether it's for marketing, whether it's for hiring new employees, whether it's whatever it's for, money is being sucked up into there. But we've just got to find a way to sit with a professional and get them to show you that there might be money that you are using incorrectly. And we can use those very same dollars and do like what the banks do, right? Make the same dollar do more than one thing at the same time. And so we're able to save early and let it grow. We're able to put the money so that it grows, and we're able to use that money to eliminate debt at the same time so that we can grow our wealth. You know, we talked about retirement savings. This is something to make the point, hit the point home. If you're saving in your savings account, your CDs, mutual funds, your money market accounts, those are what are called taxable accounts or tax now accounts. You pay the taxes now. You get a 1099 at the end of the year, showing what interest you owe, right? Then you have your tax advantage account. Many small businesses will take advantage of these types of accounts, your IRAs, your 401ks, your SEPs, your simple IRAs, because they help with taxes now. The biggest thing I want you to remember is that they're tax advantage now, but they're tax deferred. You don't pay the taxes now, but you're going to pay the taxes later, right? So you want to have a combination of these things. You don't want to just have all of your money in these tax deferred accounts only. Then you have tax-free accounts, and these are typically the ones that don't get much discussion, like your Roths, but Roths have some disadvantages. If you are making too much money, you cannot put your money into a Roth. That's where you have some other tax-free vehicles like Index Universal Life and high cash value life insurance that you can put it in. They're after tax dollars that you're putting in. You pay the taxes now, but they're tax-free forever or tax never accounts, right? So you want to have that balance between all of those. Remember, control is the goal. When we have our money in a Roth, when we have our money in the 401ks, the IRA, we have lost control of those monies. And I'm not saying not to use them. I'm saying you want to have a balance. But when we have our money in cash value life insurance, in Index Universal Life Insurance, we have more control because we can use the money with tax-free. We can use it now without paying taxes, and it can do more than one thing at the same time. So this is a good strategy for small businesses. Nevertheless, we also have to think about the battles that we got to win, which is inflation and taxes. I talked a little bit about taxes before, and I talked a little bit about inflation, but it's super important that we consider these in our planning, in our tax planning, in our retirement planning, in our investment planning. It's important that we consider those, right? When I talk about paying the tax now as opposed to paying later, it's this question that you have to answer. I'm gonna go back to that slide in a second. Do you think that future tax rates are going to be higher? Do you think that future tax rates are going to be lower? Do you think that future tax rates are going to stay the same? And depending on what you think might be the reason for you paying the taxes now or pay taxes later. Believe it or not, we are in, and you can attest to this, Austin, the lowest tax rate in a very long time. We're paying, even though taxes are high that we complain, there were times that taxes, you were paying at a certain level up to 80 and 80 something percent of your money in taxes. And so if you believe that taxes are going to be higher in the future, why would you wait to pay your taxes until later, right? It's basically the concept of, if I told you, let's go into business, I have a business proposal for you, you front all the money, you take all the risks, you manage this business on a day-to-day basis, and 30 years from now, I'm going to come back and I'll tell you how much you owe me. Are you going into business with me? No, nobody don't want to go into business with me, yet we go into business every single day with Uncle Sam on this. That's your 401k right there. That's your IRAs. That's your thing. That's what we do, right? Getting our financial houses in order. We said we have those two battles to win, the battle of taxes and inflation. But as we build this financial house, as even from some of the things I mentioned earlier, life insurance is that foundation, because that's you protecting you protecting the business. As a matter of fact, I would say there are 3 things you are going to protect. You're going to protect what you earn, what the business brings in. You're going to protect what you own. You're going to protect what you owe, and you're going to protect those that you love, right? Life insurance is what does that. And life insurance with this type of life insurance can also help with all of these things, whether it's your emergency fund. You can go to your life insurance for emergency fund. As a matter of fact, if you're making $100,000 a year and they say that you need to have, 6 months money in an emergency fund. Why would you want to keep 50,000, 50, 60,000 in a savings account, getting less than 1% of interest? You can use a life insurance contract to save your money and have access to those funds. Maybe a little bit longer than going to the bank, but it's now protected. Nobody can steal it from you. Nobody can, the bank can't decide they're shutting down. Over the weekend, we lost another bank, right? If you have more than 250,000, you're not guaranteed to get that back. And so you can go get your emergency funds from there. Sometimes we don't know that. And that's why this education is important, right? Short and long-term illnesses, you can use your funds if that life insurance policy is funded properly to do that. Risk-free investments, tax-free retirement, all those sit on top of life insurance, which is the foundation. All right. Some of these things that I mentioned here, people would ask a lot of times, is term better than permanent insurance? Term life is cheaper, it's lower cost initially. Later on, it's going to cost you a lot more. Most people can't afford it, so they drop it. And the time when they really need it or they want to pass it on to their families, they can't. There's cash cost. You are not able to build up cash. So it's like renting the policy, to be honest with you. You want to make sure it comes with the types of living benefits like terminal illness and chronic illness and critical illness, and these kinds of things. Permanent insurance, higher cost initially, but the cost remains level. And I actually would be able to show people that it ends up costing them even less later on, because as your cash value grows, you're not exposing the company to as much risk. And so your cost of insurance is less. And it comes with all of those coverages in case you're diagnosed with a terminal illness where you can die in the next 12 or 24 months. You can access your money while you're alive. A critical illness, whether it's a stroke or cancer or whatever, kidneys, you can access your money, access a portion of your money, or so that you can continue to live and you don't interrupt your lives. Critical injury, the same thing. And then you have cash value growth. You can pull that money out to make other investments, to purchase other businesses, to purchase other rental property and things like that. You can use it for emergency funds, educational funds, wealth building, retirement funds. So basically, that's about it that I was going to talk about. You know, when we spending our money, basically we spend our money, 24% of our money goes on taxes, another 14% goes on interest. Most of us are spending close to 50% of our money on debt, and we're only saving 3%. And when we're talking about retirement savings, most of you gurus out there are telling you, give me more money, give me more money, give me more money so that I can, grow it for you. Oops, it went down. Oh, well, let's wait it out. And most of us don't have that more money to keep putting in there. So we have to use a variety of things to do that. All right. And last but not least, we want to become the bank. We want to, our businesses become the bank. Our individual selves become the bank. The bank gives every dollar more than one job. When you deposit $10,000 in the bank today, the bank is going to give you disrespectfully 1%. The interest is raised a little bit now. They might give you 2.5 or something like that. But if you walk back in there the next day and you ask them to borrow $10,000, or your friend walks in there to borrow $10,000, what's the interest rate? 24%, 18, 9, 12, any of those numbers. We want to become the bank. I'm going to stop there. That's about it for me. Any other questions? But some of the things I talked about, when we become the bank, these people who many of you may not well recognized Walt Disney. There would be no Walt Disney without him using some of these strategies that I'm talking about to fund retirement plans, to fund business planning, to fund investment, things like that. Because he was turned down for Disney and he had to use his own money from this banking concept I'm talking about to be able to do that. So did Doris Christopher, the pampered chef. She was able to do that. And J.C. Penney would have been gone out of business a long time ago because the depression severely hurt him. But he was able to do that. And if these people can use these, right? Ray Kroc, McDonald's, everybody knows about McDonald's, use this same type of strategy. And if these people can do this, so can we in our community. For too long, this type of information is kept away from us, and we are given the lower quality type things to plan. Now it's not so. These types of things are sometimes called the president accounts or secret accounts, because that's what the politicians use to fund theirs. And it's we just have to use the tools that are available to us, because everybody can do it.
All right, thank you so much. I have several questions, but I am going to defer to the audience, because I always like for my audience to get their questions in first, because this is for you, not for me. All right. So please, if you have any questions, and I know you all do, please unmute yourself and ask the question. I don't have anything coming from Facebook because I'm monitoring it, but anyone here in Zoom, please unmute your mic and ask a question. This is your time. Miss Esther, do you have anything you wish to ask? Okay.
Yeah.
All right. So I'll go ahead and ask this question here. Of the, I think it was 4 or 5 options for business owners, right? The tax advantages. Which one, and I know you're not giving advisement, but in your professional opinion, which one would you recommend, for a small business owner?
So for a small business owner, I typically would say you'd have to look at your specific situation and sit down with a financial professional to see what best fits, right? But the thing about money is having control of your money, right? Being able to access it when you need it, right? And banks do this, big corporations do this. They use cash value life insurance to fund their retirement plans, to fund when they need an inflow of money. That's what they use. And I would say we want to do what they do, right? We want to do what they do. If this, we don't want to do what they tell us to do. We want to do what they do. And banks, there's something called COLI, right? And BOLI, bank-owned life insurance, COLI, corporate-owned life insurance. And that's what they use that on their, policies on their key employees, so that, and they are the owner of those policies. You're not the owner of the policies, they're the owner of the policies. So when they told you that you were worth $2.5 million and they were going to take out an insurance policy on you for $2.5 million and to sign here, and you sign, if something happened to you, that's their $2.5 million. And in the meantime, even if nothing happened to you, as they paid those premiums, as they funded that, paid up above what is due just for death benefit, all the rest, that is wealth growing for them. They can tap back in there and use that. So as small businesses, we've got to do what they do, right? And we would want to have a large chunk of our money in this strategy so that we can be able to use it. Because if we have it in our steps, and we can use our steps and 401s and whatever to help with some of the taxes as we're building our business. But here, now we can pull out money when we want to, tax-free, and do additional investments or do whatever it is that we want to do with our money. Having control is the goal.
And that's very critical. And you know, learning and sitting down with a financial advisor, planner, and this is why, you know, I always emphasize that, even though I'm not one myself, but this is what I recommend to business owners, because it's really critical to understand the advantages they are out there for you as a small business owner, and not relying on the business to be your retirement plan. And also, going back to taxes, I also recommend, you know, consulting with a CPA or a tax specialist. Do not do your own taxes if you're running your own business, because, you know, every year the IRS comes out with new ways in which to file. They're adding, you know, subsections to sections that already are established. And if you don't know what those subsections are, you can really, you know, mess up and do danger to have danger done to yourself and your business. So it's really important to seek a CPA. Because I know some business, I do my own taxes. You know, don't do that. You know, I have a CPA that does my taxes, and I place that in his hands, because I know he keeps up with the tax laws, he keeps up with the changes. So that's something I also recommend. Also, for investing purposes. And is there anyone else? Is there anyone here who wants to ask a question? Because I'm just running off my questions to make sure that we have information for everyone. All right.
And you know, I'm going to go back a little bit to the tax laws, and you are absolutely right that the tax laws, it's important that you sit with a professional, right? The tax, the 401k, it's 401, section 401k of the tax law. The concept that I talked to you about, how you can grow wealth using life insurance with these presidential secret accounts, it's a part of the tax law, section 7702. A lot of the things that you are able to do, it's because it's in the tax laws. So wealth, the gaining of wealth or the losing of wealth is in the tax laws, and they're there for everyone to use. You just got to find somebody who knows it, and you got to ask questions. Another thing that we don't, I taught 6th, 7th, and 8th grade for years in business. And when I'm teaching my children, you know, introduction to accounting and, you know, marketing and budgeting and things like that, I would tell some of them, well, I'm going to be a professional football player, and so I don't need to do that. I'm going to just put that in the hands of whatever. That's why many people end up broke. You still need to kind of have an idea to understand, so you can ask questions. I used to joke with some of them and tell them, your accountant is going to run away with your wife if you don't.
Yeah.
if you don't have an idea of what's going on. So it's important for you to pay attention and to know this. You know, some if you're using a CPA that's not able to, you hear something on the news, ask. If they can't answer those questions, then you need to find a new one. And if they're only talking to you by telling you, just send me your papers and that's it, you're not actually planning and strategizing. You need to find a new one. During the last 2 years, 2020 and 2021 tax years, there were so many different tax rules and things that they did that benefited small businesses. Many small businesses did not get that because either they did their taxes themselves, they didn't know, or they used someone that was not privy or lazy to find out about what is going on. And so people like Austin, people like myself, you reach out to us. If we can answer those questions, or we can put you in touch with someone that's able to do this, because it's no fun losing your wealth to the government.
Exactly, exactly. And I know we have about 5 minutes. Just as I like to start on time, I like to end on time and respect, for people's time. Real quick, I know you teach financial literacy classes. Can you just talk briefly about that, and then just give some information on how people can find you and sign up for your literacy classes?
So you can find me at carmen10k.com. That's carmen10k.com. And I do financial literacy classes one-on-one. I do with your churches. If you have a church, you'd like me to come and talk, and then I could schedule it with you personally. I meet with families, individual families. I love when sisters, brothers, aunts, nieces, everybody get together, and I can do those classes for you. For the last couple of years, we've been doing everything online. Now it's opening back up a little bit. We can get out in person if need be, but many of these things are being done online. And my newest project is financial literacy course for children that you'll see. I'll be sending out those flyers and posting those, where your children can actually learn these concepts when they are young, so that when you leave that wealth to them, they know what to do with it and how to move it on to the next generation. Where we're running around talking about generational wealth, if it's not been for 3 generations, we don't have generational wealth as yet. And many different communities, they plan for 3 generations. We plan for Saturday night. We have got to do something about this, So you'll see that where your child could sign up and do online Zoom financial literacy classes. I just saw an article which shows Georgia is one of them, are going to be making it mandatory that children take financial literacy classes in high school. And I think that we need to start it way before that. And your child will get that jump start by doing those courses with me.
Yes, yes. And with 3 minutes left, I have one more question. If no one else has a question. All right, for those business owners or entrepreneurs who like to invest in stocks, I know the platforms like E-Trade, where you can eliminate the broker and buy and sell your own stocks. Is there a platform that's user friendly for entrepreneurs that they can go on and buy and sell their own stocks and eliminate the broker?
So many of them are like, look, they're not paying me, so I'm definitely not giving any endorsements. But once they send me that check, I'm ready to give out some endorsements for them. But most of them are very, very user friendly. Most of them allow you to go on there and create watch lists and things like that. My advice is to, if you want to do certain things on your own, because I love dibbling and dabbling and stuff like that, read. And then there's some that allow you to be able to go on there and actually kind of practice until you're ready to really do it. But a lot of them, they're very user friendly now.
Okay, great. And on that note, I want to say thank you so much. You are a reservoir of information, immense information and knowledge in this space. We talked about taxes, we talked about retirement, we talked about investing, we talked about the advantages and disadvantages, the advantages of starting early and the disadvantages of starting late. And as business owners and as entrepreneurs, we really need this information so that we can arm ourselves, right, and educate ourselves and doing the things that we need to do to prepare for retirement and invest wisely. And I put the website carmen10k.com www.carmen10k.com. You can write it down, or it's in the chat. And I really want to thank you, Ms. Carmen, for blessing us with these nuggets this evening. We really appreciate you being part of this Entrepreneurship and Small Business Summit webinar series. This is our second of 3 webinars. Tomorrow we will have Sandra Jha, who is an attorney licensed in the state of Georgia, and she will be providing information on avoiding legal pitfalls as you grow and scale your business. But I really want to thank our audience on Zoom tonight. Thank those who have been watching and tuning in on Facebook. This live stream it's being recorded, and it will be up on my Facebook page, and it also will be on my YouTube channel, which is TM Consulting LLC. That's TM Consulting LLC, which is my YouTube channel. And you can always go there to see videos for Small Business Week, National Small Business Week, and other videos that I upload for business owners. And I really appreciate everyone for joining us this evening, and I look forward to you all being with us again tomorrow evening. We really want to say, or we really want to emphasize, taking advantage of this information, taking advantage of these consultants who give of their time to bring nuggets for free. If you had to pay an hourly rate to sit with these consultants, you would have to literally budget that into your monthly budget, right? But they're giving up their time to really share information, because they are the authority on these subject matters and in these areas. So again, I want to thank you, Ms. Carmen, for being with us this evening. And also tomorrow, the legally protecting your business operations, avoiding the legal pitfalls. Again, just as small business owners don't take advantage of planning for retirement and investing, a lot of small business owners avoid the proper contracts and legal agreements and doing the things that they really need to do to stay out of the courtroom.
Yes.
So there's a lot of things we have to, even for me, even as a consultant, there are a lot of things that I read up on, and I do a lot of coffee chats at Panera or Starbucks. I say, hey, I want to talk to you for a few, let's have some coffee, and I sit with people because I need to be educated on a few things, and I'm not ashamed about it. It's not to be ashamed that you don't know. What should be shameful is that you don't know, but you don't seek the information, right?
Yeah.
So always remember that, hey, we all don't know everything, but there's someone who knows something a little bit more or a lot more than you in a space from which you need information, right? So get educated, get the information you need. And I wish you all immense success as you go forward in your businesses and as entrepreneurs. This is National Small Business Week 2023. This is the Entrepreneurship and Small Business Summit, hosted and organized by Thompson Management Consulting. We appreciate you so much for being a part of this series. We appreciate you so much for the 9 years of support you have given to us. We always want to make sure that we're bringing you the authority and the subject matter experts, so that you can get the information you need to grow your business, grow successfully, grow professionally and personally as entrepreneurs, okay? So thank you again, everyone, for tuning in, and let's grow together, let's grow successfully.
Thank you so much. I hope it wasn't too dry with, people can't financial information, it's just whatever. So I want to say thank you guys. Share the information, follow Austin's YouTube channel, Thompson TM Consultant LLC.
Yep. Yep. TM Consulting.
And share that information. But thanks again. Apologize for my voice, and I hope that this was some good information for you.
Yes, please feel better. And thank you for, even though you're not feeling good, thank you for still, honoring the invitation to be the presenter tonight. So we thank you so much.
You're absolutely welcome.
All right, and we'll be speaking.
Goodbye.
All right, good night, everyone. Take care.